According to the richest man in Babylon, one of the top secrets in being a successful investor is learning from successful people. And who does fit better in this category than Ray Dalio? Ray Dalio is one of the greatest investors of all time. He manages the biggest single hedge fund in the world, Bridgewater Associates. I don't know about you guys, but I think we can learn so much from this strategic genius in terms of asset allocation and portfolio management. So this is why I looked into his moves in the past quarter, in quarter 2, and I made a summary from his top buys and top sells so that we can learn from him and do something in our own portfolio. So let's jump into his moves. So the first top buy of Ray Dalio in the second quarter was the SPI SPDR S&P 500 index, which is tracking the 500 biggest companies in the USA. Bridgewater Associates increased its portfolio value with 41% in the second quarter of this year, which was the most affected by the pandemic actually. And this position accounts for 26% of his portfolio. The second biggest buy of Ray Dalio's Bridgewater Associates was the SPDR Gold Trust. They topped up their account with 3.4% related to the past quarter. And the gold is the second largest position in the Bridgewater Associates portfolio. It takes 15%. If we take a look at the all-weather portfolio of Ray Dalio, we know that he includes 7.5% of gold in this portfolio. I have made a video on this topic, you can check it here. But in reality, he has 15% of gold in his current portfolio, which can mean only one thing: Ray Dalio is bullish about gold. And we cannot blame him because the gold price has got up with 28% since the coronavirus crisis, and maybe this is going to continue. Well, the next three moves of Ray Dalio are all connected with China, with this single country. But we know that he believes there will be a new world order and that we are now at the end of one of the biggest cycles in the economy. More about his predictions can be found in his LinkedIn newsletter that he publishes. I will link it down in the description below. Also, Ray Dalio believes that investing in China today might be equal in investing in Britain in the period of Industrial Revolution. So the three moves that he did: on the first place, he bought iShares China Large Cap ETF. On the second place was Alibaba, which was already heavily included in his portfolio. And on the third place, he bought iShares MSCI China, which is another index tracking the China companies. But I would like to take a closer look at the Alibaba shares, because Bridgewater Associates increased its positions with 241% in the second quarter. I'll say that once again. Bridgewater Associates increased its value in the Alibaba with 241%, which is an enormous amount. In other words, this giant Chinese tech company is the single largest company position in the Bridgewater Associates portfolio. In fact, it's 4.1% of the portfolio of this hedge fund, which is managed by Ray Dalio. Maybe now is the time to like my video. Now I would like to move to his largest sales in the second quarter, and after that we can do our conclusions and what we can learn from his moves and improve our own portfolios. If we take a look at his largest sales, we can see that he sold corporate and government treasury bonds. On the first place you have the TLT iShares 20 plus year treasury bonds. Then we have the iShares MSCI Brazil. We have the iShares iBoxx high yield bonds. And then we have the iShares, which is another corporate bonds position. And his fifth biggest sale was the Vanguard Emerging Markets Index. In fact, if we take a look closer at these sales, we can see that he closed one of the positions completely. Like for example, the 20 years plus treasury bonds. He sold all of his position. This means that currently investing in bonds it's not a good idea, but we already know this. I mentioned this in my previous video about Ray Dalio, and of course he's doing exactly the same thing. He sold most of his bonds. Now when we know the biggest moves of this genius, when we can say this about investing, we can do some conclusions and we can learn some lessons for our own portfolios. On the first place is that we should look more into China and try to invest in this country as well, because China could be one of the biggest winners after this crisis and after the end of this economic cycle, if it's true like Ray Dalio says. The easiest way, at least for me, is investing in Alibaba shares. Maybe I will include them into my own portfolio, or at least they're now in my watch list. On the second place, we can say that gold is a very good investment, at least it was in the second quarter when we take a look at Ray Dalio's moves. So this is why I will maybe increase my gold position as well, because it's just 6.5% of my portfolio. It's even below the 7.5% in the all-weather portfolio. So these are the top lessons which I learned from the moves of Ray Dalio in the second quarter, but it will be even more interesting to see what he did in this current third quarter of the year. Let me know what you think about this in your comments below, and see you again with my next video. And if you want to support me, you can just press the like button, subscribe if you're new here, and see you again.